Hello once again, I'm BR Schultz. Thank you for joining me on the BR Schultz SP500 market timing episodes here on YouTube, where historical data determines the future. The model went 4 for 4 when the market crashed on January 27th, as predicted days before. It didn't look like it was going to, did it? And so quite a few were bad-mouthing me, bad-mouthing the model, calling me a scam artist. And so obviously it got really quiet after January 27th, and a lot of them would not admit that the model was right. So, too bad. I have to take full responsibility for my own trades. The model can be right, but doesn't mean I always get the trade right. So, with that said, I don't always get the trade right. I didn't get the trade right, but the model was correct. With a January 21st plus or minus 1 business day, that got into the 22nd. The high of January 22nd was exceeded by what, 10, 15 points on the SP500 USD and tradingview.com. So that's within tolerance. Certainly 15 points, not a problem. 20 points, not a problem. Above 60, above 1%, that's when it starts looking like, you're off by a day, right? Your timing was wrong. But as long as it sticks under the 1% mark, especially around 20 points, at 1/3%, that definitely went for the model. So the market plunged on January 27th as predicted, many days in advance. And so unbelievable results by the model in 2025, 4 for 4, 100% accuracy. The next trade that the model is looking for will be a February 3rd peak, plus or minus 1 business day. So let's jump to the material. If you would like to give, please consider it. If you are stingy, don't even think about it. I appreciate those who work hard, who respect those who work hard, and obviously want to give. And maybe even if you get a sideways trade, maybe you still want to throw me $10 or whatever, because the model is exceptional, right? It's not just whether or not I always make the best of everything, but sometimes I have to show respect. Just because Michael Jordan may have lost a basketball game doesn't mean the people got their money back, right? No. They still paid the ticket price, right, to see Michael Jordan play. So hopefully some of you think the same way, feel the same way as I do about my model, that it is like seeing Michael Jordan play basketball in the stock market arena. And therefore, maybe from time to time you want to donate 10, 15, 20 bucks just out of the blue, not based on if you trade well or not, but simply because you enjoy it, right? I want to go see Michael Jordan play because he's Michael Jordan. You know, I don't expect him to give me anything. I want to go watch, right? It's my joy seeing him play because he was amazing. He was epic. He was professional beyond compare. And so I believe my model can compete with some of the best in the world. And a lot of people say you can't predict items like December 19th. You can't predict worldwide events like January 27th. Well, the model predicted both of those. I know that it's going to blow a lot of your minds. I know it breaks a lot of people's maybe pride, or what they've kind of hardened in their mind is a truth that can't be broken. But hopefully I've shattered that mindset. And many of you, you're blown away by it. And obviously I'm here to change that, and many people. I want to work so hard for the masses that they view my work like that of Michael Jordan, right? Or Elvis Presley, one of the greats, American greats, right? So thank you so much for those who have donated. Thank you. There's many that gave 50, 75, 100 bucks. I appreciate it very much. It means the world to me. But yeah, so obviously I'm trying to grow that donation base, so I have to work very hard. Think about how I'm going to do my videos, grow my culture on YouTube. Or if someday the donations completely dry up, yeah, the videos will probably dry up, right? So, if you haven't seen a video for a while, maybe there's no gifts coming in. So it is capitalism, right? You want to see the markets see value in your work, and the fruit of that is through donations. So it is a vital part. You enjoy my videos, you think they're highly valuable. It's my gift to you, and in return, please consider obviously donating something, even if it's $3. Who cares, right? That's the whole point of it, right? Is a gallon of gas, $3-4. From 100 people would be pretty cool, right? But just because it's from my side, it's not a lot of money. or your side, maybe it's not a lot of money, but overall, it's just fun to have, like, you know, the crowd cheering for you, right? That's the point of it. And yeah, there's going to be a few that want to donate more. But yes, it is capitalism at its core. That's right. I am doing this for the general public so they get to enjoy the model as much as I do. And that's the hope, is that you will develop a fascination and a joy with the model. And the whole point of me keeping it to the S&P 500 is because the model is tuned somehow to the algorithms of the S&P 500. So it doesn't work that well on other stocks and things of that nature. I'm still working on those types of facets of the model for sure. But when I've done that in the past and I've rolled out my ideas too early, they've blown up in my face. And I've been an idiot for it. So I take full responsibility for my stupidity for sure. But with that said, I have to take ownership of my own trades, and so does everyone else. And yes, that's why I have my disclaimer on the first slide and the last slide. So please read my disclaimer, understand that trading is on you, and that if you think I'm a scam artist, then perhaps you shouldn't follow me. Maybe it's too much for you to take. Maybe it's just not that time in your life to follow me. Maybe you need a break, you know, something like that. So sometimes when you get too close to something, sometimes you have to step away, take a break, come back to it later. And so I've had to do that. The model's blown up in my face quite a few times, you know, so I had to step back, take a breath, work on things for 6 months, 8 months. And as you're seeing now in 2025, it seems the model is firing on all cylinders. So let's jump to the February 3rd next swing trade peak, plus or minus 1 business day. Thank you for joining me. I'm brschultzSP500. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. So I've spent a lot of time on the 10-minute model, on the gold wave 10-minute model. So as you may or may not know, the gold wave is pretty much the macro trend. It's the macro harmonic, if you will. I call them harmonics. I think really moving averages are pricing harmonics. In my opinion, that's how I view my work, as a harmonic, a sine wave. So essentially, you're trying to find the frequency of markets, so to speak, right? So taking engineering classes, physics, you know, all the different physics equations, had to go through calculus equations, yada, 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 differential equations, things like that, right? Basically, formulas trying to understand how the universe works in the physical realm with objects, velocity, acceleration, things of that nature. As you're all well aware, I took some material classes too. So there's a little bit, obviously, of elasticity, things of that nature in pricing. They talk about that. It's no surprise. So deformation, things like that. So all those things are present in sine waves and my work. So you might see that I have spent a lot of time on these waves, and hopefully that bleeds through when something like January 27th happens and it blows everyone's socks off, that the market's dropped 150 or so points overnight. And again, everyone says that is not possible for you to predict. And yet that's exactly what the model did on January 27th and December 19th. Surprise, surprise, it is predictable. And days in advance, right? So I've proven that my motto or my thesis is historical data predicts the future. And then if you want to go on my blog or the top of my YouTube channel, you can see the long-term prediction for the macro market peak around January of 2028. And as we approach the bottom, I believe will occur around March 21st, 2025. And then I believe we begin like a little under 3-year journey upwards into the sky, and peak again around the Super Bowl of 2028 or just prior. And so with that said, the next swing trade on the 10-minute model. So I try to use the 10-minute model as pretty much my guide for the macro view. And I have been working on a 15-minute, I'll get into 20-minute, blah, 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 right? So basically I take the DNA of the 5-minute because it works so well, and I've been inserting it in the higher time frame models. All right. So we have 1, 2, 3 here. You have your 1 that starts on the very edge of the gold wave, and your 3 that touches the very top of the gold wave. So your 1 and your 3 are very important. They have to touch the very outer edge. So it could be the inner edge in some circumstances as well, but it needs to touch the very outside or very inside, essentially. And number 2 can just go through anywhere in the gold, right? So the trend line pierces through the gold wave at point number 2, and then skims off the edges at 1 and 3. So there's this tension, if you will, an imaginary tension or stress, like in a spring, like in a garage door spring. Have you ever seen a garage door spring break in half, whatnot? There's a tremendous amount of force behind it, right? So that's what happens when you follow this trajectory all the way out to the top of the graph, drop the line straight down. It says there's going to be a peak estimated on roughly February 3rd, plus or minus 1 business day. And so that releases all that pressure of that spring on that garage door. It rips the market upwards. So there should be a pretty powerful peak right around February 3rd. So again, February 3rd is the next swing trade peak, what the model predicts, plus or minus 1 business day for it to receive its accurate call. Now, I think Apple releases earnings on aftermarket on January 30th. So that's quite interesting. So that's you're kind of testing the limits of the model at this point to see if it can predict what's going to happen with Apple, right? Could Apple sink the markets on the 31st and then it rocket on February 3rd? I would tend to think not. And the reason is the gold wave, I believe, is the macro wave. So I believe it needs about 2 to 3 days to reach its pivot point. As we saw around January 6th peak, it still kind of had strength into the early 7th. If you remember, that's when I even took a bigger short position early on January 7th. We had about 2.5, 3 days of strength into the January 6th peak, right? So I think, in my personal opinion, the markets, tomorrow is January 29th. Let's say the markets drop tomorrow, right? Markets crash, fall, sell off, whatever, or go sideways. I really don't care, right? So markets go sideways tomorrow, and then they're gonna, if the model's correct, if the timing is correctly tuned, then the markets would go up, 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 up until they hit their ultimate peak right around or on February 3rd. And then they would have some type of peak, and then you'd see some type of sell-off. Yes, some of you know my prediction about the Super Bowl roughly, so I'll leave that for another video. If you want to see more of my work, please donate. It's $5, $7, $20, $25, $30, $34. My favorite number in the market is 34. So if you want to make my day, donate $34 or $77. Those are my 2 favorite numbers, 777 or 34 or 340. So those are my favorite market numbers. I based all my work basically on the number 34 because 3 and 4 equals 7, right? And 777 is my one of my favorite numbers. So with that said, let's jump to the 5-minute model. Again, this is the 10-minute model. It has the 10 in the little blue bracket. I had to use the 5-minute algorithm or something. Don't ask me why it says 5. I get it, but it has the 10-minute model, right? And the dates are obviously condensed more than you'll see in the 5-minute graph, right? So again, this is the 10-minute model. This is where I want to see a peak. Number 1, I want to see a peak on the macro scale. It must be here, because when you get a peak or a bottom on the macro, then the micro will fold or consolidate underneath the macro, right? So I believe if I get the macro aligned correctly, then the micro will automatically build into it, right? And I should see the evidence or the fruit of the macro in the micro. And that's what we're going to do next. Look at the micro peak on the 5-minute scale on the gold wave, which again, the gold wave is to control the larger picture. Even on the 5-minute scale, whatever picture, whatever time frame it's on, it has the most authority, the most power, the most prominence. So let's move on to the 5-minute model. So again, if you haven't subscribed, please consider it. If you haven't donated, please consider it. If you haven't shared my work, please consider it. I want to grow my YouTube channel. I want to grow the donations. I want to serve you. I want to serve the public. I want to wow the crowd, right? I want to be the guy that provides the free entertainment on YouTube that blows everyone away. even the top timing models in the world. I want to be the guy that competes with them and that from time to time beats them, right? I wanted to be the model that predicts December 19th and January 27th. And yes, it did. You can go back and watch the videos, oddly enough. You can see history in the making even back then, right? And then one of the guys that I've been in contact with for a while, he sent me the NVIDIA's worst sell-off days in history. And January 27th was NVIDIA's worst sell-off day in U.S. history so far, right? So that was pretty sweet that the model called it out. All right, this is the 5-minute model, and I've done some studying on it, and you can actually use the gold wave to the original 50-point horizontal, which is what it's drawn up to right now. So it doesn't need to go specifically to the top of the graph. Now the 50 isn't always the best one to draw it to in super strong markets. That's why you need the 10-minute model to really lock it in. And I would argue that on the 5-minute, drawing the trend line all the way to the top of the graph is a much more powerful peak than to the 50. So that's why, again, I think we're going to see some type of a bounce up near the Super Bowl or past the Super Bowl. Maybe it's the CPI date after the Super Bowl will be the peak or the final peak in the market. Another peak, should I say. And I'll make another video for that. But again, this is my life's work. If I'm a scam artist, please don't follow me anymore. You don't have to. You can go do whatever you want. It's capitalism, right? Entrants can come and go as they please. And I don't charge anything, so I don't see how I can scam people if I am simply giving my life's work out on YouTube. But there's some of those that probably some people that have probably had some bad trades and they want to blame me for their actions. And again, I want to find those followers who have their own trading system and use my timing in conjunction with their trading system, right? Because I am not a financial professional. I am not licensed in any way. My work is for entertainment and education only, as I cannot sell or advise of any type or sort. So all I can give you is the forecast by the model. Leave it in your hands, but please speak with a financial professional before you make any trades. There's high risk involved with trades, and a lot of people use options, and sometimes the markets go sideways and you lose all your money. So for me personally, I always have to when I buy options, I have to consider buying options past the date, right? So that's how I trade. It's not advice. It's not some type of licensed professional opinion. No, not at all. But when I buy options for these types of trades, I buy 2 days afterwards, right? So me personally, instead of the 3rd, I'll be buying the 5th for a call option, right, on the index. If we sell off tomorrow, maybe fall 50 points tomorrow on the 29th, let's say. Let's say we fall 50 points from today's high. Whatever the high was today, we drop 50 points down. So if you want to understand how I measure things, I look at today's high on SP500 USD on tradingview.com. I measure down 50 to 70 points from today's high. If I think tomorrow's going to be a sell-off, then I measure 50, 70 points down. That's where I start taking my risk, is down there, right? Or vice versa. When markets move up 70, 80 points from the previous day's low, that's where I start taking my risk if I think it's going to sell off, right? So I look for that 70 to 80 70 80 point move either direction. On sell-offs, obviously in a bull market, maybe you only get 50 points down, right? So, but for up moves in a bull market, you're going to see 70, 80, 100 point move, 100 point swing, right? That's pretty common. As we've been seeing almost every day, there's a big updraft, 70 to 100 points. So you need to study these things on SPX500 USD. Look at the swings, look how they're reacting. Maybe just pull up a chart for the last 4 months. Pull up a 2-hour chart or a 4-hour chart on tradingview.com. Look at the swings from day to day. How much are the points between the bottom of the previous day to the peak of the next day? Usually it's about 70 to 100 points on upside moves. On downside moves, usually it's about 50 to 70 points, right? So that's where me personally, that's how I trade. You don't have to do that, right? You can do whatever you want. After you speak with a financial professional, you can do whatever you want. Do whatever they suggest if that's what you feel is best. But I'm just sharing with you my personal trading strategy, how I trade. That's usually how I get close to break even if my trade goes sideways, because I waited for the market to move up 70, 80 points, right? And that's when I went short at that 70 point, 80 point extension, right? So that's roughly where markets fell down to on January 27th. They're below. So I went short, I think, around 6,000 or whatever that trade I made. And then markets went down to 59.20, I think, on January 27th. So in theory, my short shares either go flat or I make money, right? That's a pretty good sideways trade. If I had to pick a sideways trade, it still went sideways or it made money, even on my stupid move in early, right? But that's the beauty of the model, in my opinion. It protected me, because the model's crash on January 27th happened. Look at SP500 USD. There's a lot of people that just won't admit it because the model predicted it. In their pride, and they're stubborn, and they don't want to admit that the model is right. Up to them, right? But for those of you who can just look at a chart and say, yep, SPX500 USD went down to 59.20 pre-market, great call. And that's when I was getting donations, right? I got a couple donations that morning. I woke up at like 4 in the morning, and someone was trading, I think overseas or something, and they sent me a sizable donation when the market was down 150 points. When it was down near that 59.20 on the SPX500 USD, they sent me a donation. So I woke up and heard this chime on my phone, and I got a very nice donation. So thank you so much for that. It means the world to me. It means someone's really valuing my work. And again, looking at their own indicators, looking at resistance or support, whatever they're good at, and then pairing it up with my timing, and realize that my timing bottom was around January 27th. They pulled the plug. Maybe they went long too. I don't know. Maybe they're doing great on a long. But with that said, the 5-minute model is looking for a peak around February 3rd, plus or minus 1 business day for call number 5. So again, this is like the 5th call of January. If you really want to be technical, it still falls within January. So this really could be 5 for 5, 5 calls correct in the month of January 2025, which is pretty huge for 1 month. So thank you so much for joining me. It's highly addictive. So there's going to be times where you probably get mad at the model, you get mad at the trade, step away. I have to too. It's just the way it is. But please don't sit and bash my model when you know that it's done great, done far better than anyone else can perform. And if you have a better model, then share it with a group on YouTube channel. I'll even watch it. If you can find someone that can out time my model, I would love to see it. I would love to have a little competition. But again, I think that my model is extremely hard to beat, and I think you're going to have to pay $2,000 to $5,000 a year to get the turning points that I'm providing. Again, I think you would have to pay a subscription fee of maybe $2,500 USD every year, up to $5,000, maybe $7,500 a year, to get this type of movement predictions that are hyper accurate. And again, if you have a good trading system that aligns with these dates, it really sets it apart, right? So the timing, I want to provide the timing. I'm not licensed in any way, shape, or form. So please, hopefully you enjoy this, and hopefully I really, the Lord would provide a few different people that would really be able to benefit from my work, generate a huge amount of profit, and obviously bless me through gifting back to me. I would really appreciate it. It would mean the world to me. That's my goal in 2025. Obviously, if donations don't really amount to much in 2025, I'll see at the end of 2025. But if donations slow at any time of the year, maybe I take a break, right? Maybe they pick up again and people want to see videos again. Cheer for an encore. Throw some donations at me for a Gatorade. Maybe I come back. So if you're listening to this in the future, and I've been gone for 2 weeks, 3 weeks, you wonder where I'm at, maybe you want to consider donating. Either way, I'm brschultzSP500. If you haven't subscribed, please do. I'm trying to grow my channel. And the more donations I receive over time, who knows? Maybe I could do this full time sometime in 3 to 5 years. That's my goal. Thank you so much for watching. I'm BR Schultz. Talk to you next time. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, BR Schultz SP500 systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor.
Caveat emptor.
Seek professional advice prior to investing. Bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.